if the institutions come into the silver market and or nation states or a combination thereof, we'll see a substantial move in silver. So I think we're tight. I think we're tighter than the price shows. I've thought that for the last year, and I believe I'm correct, but that doesn't help people with a higher price. Nonetheless, at some point, it's got to factor into the overall market.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for January 17th through January 24th, 2023, while supplies last. This week we feature our choice 10-ounce silver bars at just $2.25 over spot per ounce and backdated quarter-ounce Canadian maple scruffies at only 4% over spot. Frequently, you have to choose between high-volume bars like 1,000-ounce bars to get exceptionally low premiums, or pay a higher premium for more liquidity. But these Our Choice 10-ounce silver bars come from major mints, are 3/9 fine, and provide a great way to stack quickly while maintaining a high degree of liquidity, all at the low premium of just $2.25 over spot per ounce while supplies last. Next, we have quarter-ounce gold maple scruffies at 4% over spot. The Royal Canadian Mint packages quarter-ounce maples in sheets, which most people find inconvenient for storage, trade, or transacting, so they frequently remove them and put them in individual flips or in tubes. As soon as the packaging is removed, they go from being considered brilliant uncirculated to what is called scruffy condition. They may occasionally have a nick or scratch, but by and large are in excellent shape and nearly indistinguishable from their brilliant uncirculated counterparts. And the best part is that these so-called scruffy coins are available at just 4% over spot, much less than the 10 to 15% that you would ordinarily pay for the increased liquidity of quarter-ounce gold. So if you'd like to purchase 10-ounce silver bars at just $2.25 over spot, quarter-ounce Canadian maple scruffies at only 4% over spot, or if you'd like to inquire about any of our other products or services, call us at 1-888-815-4237. That's 1-888-81-LIBERTY. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan, the silver guru from the Morgan Report. David, thank you so much for joining us today.
No, thank you, Elijah.
Well, it's great to have you. And I did want to discuss metals for 2023. It looks like we're off with a bang here to start the year. Gold is at an 8-month high, around 1930 right now as we speak, and silver's just above 24. Your perspective on where we are right now, it seems like gold is leading.
Gold is leading presently, and just to kind of reiterate what I've said on your show and others, I said, 6 months ago that the run to gold has begun, and it's subtle. It's almost stealth mode. Most people that don't take a hard look at the market might miss it, but that has been borne out with not only price movement, which is confirmation, but the fact that the central banks, I think, had the biggest amount of gold purchases in the last 50 years or something. I forget the exact headline. So as the fiat fiasco unravels further, the bankers that are in the know will continue to accumulate gold. Nation states as well. We're well aware of China and Russia continue to accumulate. And the run means that they're accumulating at a faster rate. And that's what's taking place with the central banks. So that's kind of the backdrop. Silver's been lagging for too long, in my view, but it's doing better than it was, and it will follow gold until there's enough momentum, and then it will exceed it. Most of the bank analysts and non-bank analysts are looking for gold to go well over 2,000 this year. I think it'll go over 2,000, 2,200, 25. I don't know. No one really knows. But I think we will see continuing strength in the gold market. Of course, it'll go up and down, and there'll be some washouts that'll happen. And, when the paper market trades, in a non-advantageous position for the speculators and they're out of money, then the big banks will, short the market heavily, drop the price. And that's been going on for time immemorial. But the overall trend, I think, is up. I do think that we may get one of those black swans I haven't talked about in a long time, and that could ignite the gold market and the silver market and take it to, very big moves that would probably subside after things calm down. But you cannot rule out some type of financial, I'll call it, problem that takes place through the international currency markets. I mean, you've got Japan struggling with their, half a point interest rate. You had the UK having to come in and make a massive intervention with their pension funds because of a gilt sell-off. And so there's a lot going on that proves the instability of the system at large. And the leverage in the system is just astronomical. So any move against the main thrust, meaning, lower interest rates, will cause more and more problems. So it's going to be a rocky road. I think the metals are a place to be, at least partly. I would definitely personally lighten my load in the general equity market. I wouldn't touch a bond for anything right now unless it's short term, T-bills only, US backed probably. I wouldn't be too big in any foreign exchange bonds, but that's me personally. And so I think I've covered that.
Now, do you think the main driver right now is that central bank buying? If you had to kind of hone in on one or two factors that are causing the metals to rise, what would those be?
I say both. Central banks, obviously, because that could be proven, but you need to look at on aggregate, how much sovereign wealth, nation states, family offices, and just well-off individuals. I mean, last year was probably the most consultations I did with people that said, David, I've got $1 million, or take that times 1, 2, 3, 4, 5, 6, 10, and I've never bought gold before. I don't want to get burned. How do I do? Who I buy it from? Do I store it? Don't I? That type of thing. So there were people that are aware of the problem but had never taken action up until last year. And I think there's more out there. In fact, I know there are more out there. So that factors in. How big a piece of the pie is that, Elijah? I don't know. But it's an additional amount. Remember, all markets move at the margin. So the banks are buying more than normal. And then the retail / institutional buying more than normal. Those add up. And so obviously with $1,900 gold plus 1,900 plus, we're off to a pretty good start. We usually got a good seasonality, by the way, and that's usually into early March. So I expect, up and down, generally up over the next month and a half or so, and it may go, and I expect to go beyond that, but we will get a pullback at some point.
Now, on the retail side, we've seen a significant drop in premiums over the last couple months. It seems like everything is bullish for the precious metals, but for some reason on the retail side, we're seeing more supply and lower premiums.
Yeah, we are. I mean, I was concerned about it all the way up. I mean, there were dealers that were doing, let's say, less of a markup, but the industry on the whole I won't say they got greedy, but they saw that they could keep their premiums high. And as long as there was buying demand, the market would allow that. But at some point, premiums usually diminish. I mean, Franklin Sanders is a good friend of mine, has been for years, kind of a silver guy, writes the Money Changer newsletter. He's taught me much in the markets, and I've done the same for him. And he showed me over and over again that premiums eventually, come back to what I'll call normal. And what worried me about it was these people that had to have Eagles and were spending, I think at the time, they got as high as maybe $12, $14 over spot. It was absolutely insane. And yet the market at that time was taking it on. And I think you could sell back at maybe a $6 premium. And I had many of my clients ask, what would I do? And I said, I'd split the difference. I would sell half of my Eagle position to capture that $6 premium, maybe hold it in cash or buy bars or buy a much lower premium silver item and get more silver for my buck. And now I had a guy get a hold of me on Twitter, and he had 3 monster boxes, and he wanted to capture that juicy premium. And the dealer he went to offered him $2 over spot. And so I checked around and found out what you just said. The wholesalers have got a lot of inventory. All of a sudden, people are selling back, probably some at a loss because of, that spread. And the dealers have plenty of inventory right now, and there's not a lot of retail buying right now. So obviously things do change. I just want to point out something about the spread on the Eagles. I just got this in the mail. This is very common every year. Can you focus on that? But it's a 2023 Silver Eagle encapsulated in the plastic holder for $55. Those happen every year. They usually do these mass mailings to people they get a list from somebody. That's not mine. But anyway, that is, something that should cost around $25, $27, $28. They put it in a plastic holder, and that goes on all the time. And so what I'm pointing out is that that's another way to have a huge premium in the Eagle market. It can happen in other coins, but the Eagles are the most popular, most sought after, and it's easiest to do. I actually know that happens every year, and I called one of the wholesalers that I work through, and of course, make sure that all my members are well aware of them. And it was random years, but they're all encapsulated. And my price on those was basically the same price as a non-encapsulated Silver Eagle. And there weren't the high premiums in those days. So I'm going to say I paid $3 over spot or something. And they're very much a nice presentation. I would give them away for people that subscribe at the investment conferences as kind of a bonus and a thank you. So got to be careful. I think that 2022s may keep some type of premium because the mintage was only 16 million or something. I'm not sure the exact end of year numbers, but I know it was like less than half of what demand was. I mean, the demand was probably for more than 40 million ounces, but obviously the mint didn't produce that.
Yeah, I think one of the key things is if you're investing in precious metals for the metal content, to make sure to purchase products that are closer to the metal price, right? So, I mean, there obviously is the argument for the American Silver Eagle, and I think it's important to have some of them, maybe for a worst case scenario, because they're most recognized. But yeah, I mean, you were mentioning the premiums even on the buyback. I think for a swap, our peak was like $12 over. I had a client swap for $12 over into like 1,000-ounce bar. So you see, that $10 spread there. That was a great trade right there. But I think, yeah, I mean, if you're kind of buying bullion on bulk, it probably would be a better option to go with a lower premium product because, at the end of the day, unless you're a collector, you're not really purchasing for the particular product, right?
Exactly. I mean, there's other arguments about reporting and all kinds of things that factor into it. But, I have a few monster boxes, but it's not my primary investment. I mean, if you read the 10 Rules of Silver Investing, I wrote over 20 years ago, it said, I'll just repeat back what you just said, Elijah, and that is buy the most silver per dollar invested. Because silver at the end of the day. And that's what Franklin points out, whether it's a Britannia, whether it's an Eagle, whether it's a Maple. If it's an ounce of silver, it's an ounce of silver. And when you sell back, you usually get close to melt. In other words, spot price. Not always, the coins usually will carry some premium, but not much. And that's something to bear in mind. People think about it on the way up, and they don't think about, when they go to liquidate. So just a word to the wise. Well, I just want to add one other thing, and that is, well, how long is this low premium going to prevail? Of course, the answer is I don't know. I have a bit of a feeling that a little longer than any of us want. And I don't want to see higher premiums. I want to see a normalized market. But until the inventory from these wholesalers gets, tighter, you're going to see them competing for the retail market. And they'll probably lower their markups to the retail side just to move inventory. Any business you're in, you don't want whatever you sell to sit on the shelf. You want it to move. And the way you move a dress shop, if a certain amount of yellow dresses aren't moving, is you mark them down. You put a sale on them and you say, these blue dresses are $50, but the yellow ones are only $35. And they'll usually move.
Now, how do you reconcile that when we're seeing this on the retail side with a lot, kind of the best supply we've seen in many years here, lower premiums, but you're also seeing, for example, there was a CNBC article that our friend over at Arcadia Economics, Chris Marcus there, tweeted out, and it's a CNBC article talking about how silver could hit $30 this year because of a shortage. So it seems like there still seems to be an argument that there is a tight supply of silver, but on the retail side, it's a bit better now.
Yeah, well, you answered your own question. First of all, the silver market is probably one of the hardest to analyze there is, and there's always a conundrum. It depends who you talk to. You talk to these bankers. I mean, I saw something on Twitter recently about the market cap of silver. They took the all-time mine supply, which is about 10 times greater than gold. So you've got 6 billion ounces of gold mined worldwide from the time we started records, and so 10 times that's 60 billion. So they take 60 billion ounces times the $25 an ounce. Well, that's just all totally bogus. There's a half truth in there, and that's how much do we mine. But how much is available is probably equal to the amount of gold. So the market cap is 6 billion times 25, not 10 times that amount. So there's number one. So it's because the retail market is a smaller market than the industrial market. So let's say on a really good year, the retail or the investment market total, which is retail and institutional, is 20% of the market. But 55% of the market is industrial. So when you add those two together, the margin is the investment side. So as that moves up and down slightly, I mean, you can wipe out this oversupply in the wholesale market in 2 days. I mean, for example, if that deal that took place last year for 50 million ounces of silver from that big investor, let's say that they came back in the market and bought 100 million ounces of silver, you'd see the premium shoot right up right away again. So I think I've answered it. I mean, the overall truth of the matter is, yeah. In fact, I'll go a step further. This is theory, but remember back, I think early last year, Elijah, where the Silver Institute made a statement that there was a worldwide silver shortage or something to that effect.
Was that the U.S. Mint?
Yeah, it was the U.S. Mint. And then they quickly retracted the statement. They said, no, we just mean that it's not a worldwide problem. It's just us. We're having trouble sourcing, which was true for them. And there's a bunch of underlying stories about that I won't go into. But I thought that was interesting the way they stated it, because the Silver Institute has a pretty good handle on what's going on. I mean, they write the Silver Yearbook every year. I mean, they deal with a lot of, institutions, governments, industrial users, and that type of thing. So they got a pretty good wag on what's going on in the silver market. And I don't think they just say that off the cuff, but again, they retracted it. So coming to what Chris pointed out on his Twitter, Arcadia Economics, probably is true. I mean, if we have a 200 million ounce deficit, that's huge. That's almost 20% of the silver market on an annual basis. Remember, Buffett bought about 25% of the silver market in one fell swoop, and the 130 million ounces that he bought, only 90 million was delivered. He had to wait almost 2 years to get the other 40 million. So, again, going back to the question, just to reemphasize, if this woman that bought 50 million ounces, $50 million worth of silver were to buy 100 million, you probably see the market move. So the main thing is, what are the institutions going to do? That's kind of the big factor moving the wagon the dog. It's if the institutions come into the silver market and or nation states or a combination thereof, we'll see a substantial move in silver. If, on the other hand, you see, and nation states usually don't hold silver outside of India. They don't even hold it in their central bank. That's just manufacturing and local people. But so I think we're tight. I think we're tighter than the price shows. I've thought that for the last year, and I believe I'm correct. But that doesn't help people with a higher price. Nonetheless, at some point, it's got to factor into the overall market, and just the subset of retail buying, which is most important but nonetheless, it ebbs and flows. So you could have an overage temporarily in retail with the overall big picture being we got a real tight silver supply. Hope I explained that.
Now, I know on a technical basis, you on your latest weekly market wrap, you talked about the cup and handle formation that the silver chart is making over the last, I guess it would be 40 years or so, since 1980. What kind of time frame do you see this playing out? Because it kind of predicts above $50 silver, possibly 100.
Yeah, well, the timing's always everything, right? And I don't know. I think 2023, as I said in the last interview, is going to be a good year. I think 30 or higher. I mean, technically, once silver gets above 32, 3, it should shoot up toward 50 pretty easily. I think once it gets to 50, and I don't think it'll happen this year, but if it does or whenever it happens, I think you'll see a pretty big sell-off for a while. And then silver's going to do something it's never done in my lifetime, and that is to base it, 35, 40, 45, I don't know, and regather its strength and then shoot up through 50. And technically, any momentum trader or any algorithm that's worth a dime will see silver at an all-time high, and that's the most lucrative and emotional time to buy it, but it's also the most guaranteed time to make a profit, if and only if you understand an exponential function. Because on an exponential function, it could go from 50 to the 100 that you just talked about in 2 weeks. And if you don't get too greedy and you take the middle and you buy it at 55 to be sure you're buying at a new high, and it gets to 75 and you take your leveraged position off and count your fiat or turn it into real metal, you'll be having a happy day. If you think you can get out at the exact top and it's peaked, good luck. Unfortunately, I do see both the metals, particularly silver, probably running on a spike high again, unless gold gets remonetized somehow. I don't think silver will be remonetized, but it could be. So if there was some monetary stability built into the gold, into the precious metals or gold, then you might see a different movement in the metals because it's used as a basis for stability. So it's like the ultimate stable coin. I mean, an ounce of gold never changes. So what's more stable than that? An ounce of silver never changes. So what's more stable than that? What changes is the currency, and that makes the price change. But the stability is actually in an ounce of gold, ounce of silver.
In your perspective, and obviously, as always, we can't give personalized investment advice, but in your perspective, is right now a good time to get into the metals, or some people are looking for a pullback given the huge rise that we've seen in both gold and silver?
We've got some pretty good momentum left, especially from the commitment of traders on the silver side. So I think we do have some more upside. The best thing to do for most people is just dollar cost average. I mean, one, if you don't have any and you're worried about, your financial future and you believe that precious metals is a good way to go, whatever your plan is, it's X amount. Take that X and divide it by 12 or by 5 anyway, and buy over the next 5 months or buy every other month. Takes the emotion out of the investment. And when you do that, you have a much better chance of not only doing better in the longer term, but you get to just kind of relax. A lot of people get the story, they understand the story, they see the need, and then they buy, everything that they can. And then they find out that markets move up and down. And as soon as they buy, it's been going up for, 5 weeks. They buy it, and now it goes down for 5 weeks. So if you are really worried, then I would say buy half of what you want and wait, and then buy the other half when the prices come down or up. And there's nothing wrong with buying on the way up, if and only if you're truly reestablishing a bull market.
All right. Well, David, it sounds like it'll be a pretty exciting year for 2023. We definitely hope so. Before we let you go, where can our viewers find you online if they'd like to continue to track this with you?
Yeah, the best is go to the landing page, themorganreport.com, get on our free letter. Go to the blog, and on the blog right-hand side at the top, there's icons for our Twitter feed, LinkedIn, Facebook, YouTube, and I have an Instagram channel now. It's Real Silver Guru is the title of the Instagram channel.
Fantastic. Any last thoughts before we let you go, David?
Good year to be in the metals. I think it's going to be a year that you really don't want much exposure to any new stock positions in the general equity market, real estate, or bonds. I would stick to the metals and cash. I think we're going to see more and more problems in the supply chain, and this inflation thing is far from over. So just live within your means, accumulate metals over time, and try to relax during these very interesting times.
Fantastic. Thank you so much, David, and God bless.
Bless you.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.